Well, thank you all for joining us. This is the Fats, Fuels, and Oils forecast webinar for the week of Monday, May 10th. And today I have Brian Standard with us. He's going to go over choice white grease. If you have questions, go ahead and drop them in the Q&A during the presentation. And then at the end, we'll get to them and respond to each of your questions in the order they came in. With that, Brian, we'll pass it to you.
Thanks, George. As George said, this week, we're going to go through the choice white grease forecast for the near term and looking out further ahead over the next year. Really, it's a pretty simple formula. For this market, the replacement costs are higher. So you have corn over $7 a bushel. Actually, I haven't checked in the last hour, so apologies if it's crashed. But you have corn over $7 a bushel. You have a really strong soybean oil market, strong demand from the renewable sector, and there's just a lot of demand out there. There's no cheaper alternatives, and supplies are stronger than they were 3 or 4 years ago. But relatively speaking, they're a little bit tight from some labor shortages, and we have the Memorial Day holiday coming up here in just a few weeks. And so that's going to keep supply snug. Buyers are going to continue to reach for material, for feed, for biofuels. And as a result, we're forecasting the market to trend above 50 cents here in the near term, and then stick at that level or above that level over the next year. Here we have it peaking out. You can see an average of just under 51 3/4 in June. There's a little bit of a lull here. I think summer production should add some more material to the market. Potentially some weakness in the second half of the year in the corn market could contribute to some lower prices. And then at the end of the year is really when the explosion of demand is going to come at the market from the renewable diesel sector. So while some of these plants may not necessarily take in choice white grease directly, I think the impact on the overall lipid markets is going to raise the bar and drag the entire complex higher as people struggle to find enough material to run their plants. Soybean oil is going to trade higher. As a result, you're going to see higher tallow prices, higher choice white grease prices, and definitely higher distillers corn oil prices. And we expect to see that again, some seasonal downtime, but really that pickup there in the beginning of Q1 2022, and prices to be strong, moving out ahead. I'd say if there's any risk for this forecast to change, is for it to go higher as demand for low carbon intensity fuels increases and drives the prices higher. I really don't have a lot else to say on the choice white grease market. It's pretty straightforward. It's just the market is undervalued now relative to replacement costs and strong demands there. So we expect to see things trend higher. And I would say the same thing holds true, which we covered last week in the writing with bleachable fancy tallow and with technical tallow and edible tallow as well. With that, I'm happy to take any questions anybody has, George.
Yeah, sure. Ryan, the first question we have is, are there specific biofuel plants that you expect to start up at the end of 21?
Yes, I believe that's in the Outlook that we have a renewable projects tracker that you can take a look at, or one can take a look at, that has a list of all the plants that we expect to come online, I think over the next 3 years. But off the top of my head, I want to say demand or the capacity is expected to increase about threefold from now to the end of the year. That includes existing plants expanding their capacity, as well as new projects that are going to come online at the end of the year and the beginning of 2022.
Okay. And can you give us some insights as to why UCO is trading below tech tallow right now?
Yeah, we've had that question a couple times because from a CI carbon intensity score perspective, we should see used cooking oil trade above technical tallow, but technical tallow is right there at an all-time record high of tied with a record high of 62 cents a pound to Chicago. I really think that it's the competition between sectors that is driving that price. So you have the traditional, soap and oleochemical demand sectors that take technical tallow in, competing with renewable fuels. And it's highly fungible across all the renewable diesel plants, where something like yellow grease can maybe only go into a couple of players. That premium product is desired by a number of the different plants, where even some of those plants can't take as much UCO. So there's, I think, more competition from a diverse customer base driving that big premium in the tech tallow market. I think additionally there was some weakness in the used cooking oil market that may have delayed an upside, and that was tied to delayed vessels and some bottlenecks pushing some material back into the U.S. interior, and that's created some near-term price weakness.
Okay.
But we expect that spread to narrow.
When do you think we'll see low CI feedstocks trade above soybean oil?
I would expect that to happen potentially as early as 2022. I mean, our forecast doesn't indicate that, but again, there's risk for that to happen on the upside. As competition increases and the carbon intensity value becomes a bigger part of the consideration in selling the feedstock, I think that certainly is going to happen. You know, like I said, as early as 2022, early 2022, I think we could see that, but it might be further on down the line.
Okay. I have one more question here until anyone loads it up with more questions, but is anyone selling renewable diesel outside California, and at which price?
Yeah, that'd be a question for Bob. I'm sure it could be selling in the Pacific Northwest, but as far as the retail goes, I'm not entirely sure. So that Bob Lane would be the person to answer that one.
Okay.
Yeah. On the previous question, I'll add one more thing. I think one of the reasons that soybean oil has a premium and is preferred is because, one, the market size, it's such a larger supply than any of the low CI feedstocks, but there's also more efficient or better risk mitigation tools through the futures market. So as we see more products come on and people start to become more comfortable with risk management, we could see prices increase for that and see those prices trend above soybean oil as they become more widely used.
Okay. And I also want to take a moment just to update everybody. I've got a lot of requests for what's going on with the various events. We've sent a lot of emails about the events going on. So we updated the Jacobson page with an events list up here where you can get to the virtual conference, which is in 2 weeks, the physical conference, and some other conferences that are going on. So if anybody wants to register for any of those, just go to the events page and you'll find all of that. That should answer most of your questions there. Other than that, Ryan, we don't have any more audience questions. We'll post the recording of this probably sometime tomorrow and shoot you an email when we do. Otherwise, thank you all for attending. And Ryan, thank you for answering the questions.
Yeah, thanks. Have a good one, everyone.
Bye, everybody.
Bye.